Top of the morning, traders. This is the wake up call. It's non-farm payroll Friday. We could have a bit of volatility. The volatility could be a bit disappointing today because it is because traders are still out in most of North America with the effects of the hurricane that hit New York City. Wall Street may be open, but electricity is still out in most of lower Manhattan, which is probably going to cause a more muted reaction, similar to what we've seen in most of the majors so far. This week we could have a little bit of slow range-bound trading. Not slow range-bound trading. If the number comes in line, we could get a pop here and there. Now, if we do have a significant miss or beat, I think the estimate is for a number around 125,000 K. But if we have a significant miss, I mean, if we have something all the way up at like a $200,000, we could see some real action. Or if we have a really bad number. Down at like say 80,000, we could see action also. Let's take a look. Let's take a look first at the Euro USD, just because I can walk you through quickly the trade that we did. I did. I went short the pair. Somewhere around 128.61, I believe. I'm not 100% sure anymore. And the pair did move up to test the top of the range, but it did not break. And my trade was obviously over here somewhere. It did not break, and then it fell down today. I closed it when we moved down to, actually I closed it like 122.92, I believe, just because we were sitting right here at this support level, and I knew non-farm payroll was on the way, so I just wanted to get out of the remainder of the trade. Normally I probably would have held for probably hoping for a break of that level, looking for a move down to the 128.25 level. Anyways, so heading into today, though, we have support right here at 128. Let's go back to the daily chart. We have support right here at 128.25, which has acted as a support level in a smaller term context. And any move down towards this 128.25 level will be capped by a lot of support, because there also has the 200-day moving average right there, and you can say this level did cap the pair once or twice already in the future. So if we get a shot down, we could probably find resistance here at this 128.25. Now, if for some reason the pair moves up, we'll probably find, because with the average ATR being what it is right now, we would definitely find resistance again once at the 129.95 and 130.20 level. So those are the two tops of the larger range that we would probably find ourselves capped in today. So just watch support at 128.25 and resistance at the 129.95, 130.20. And you can also definitely ride any move if there is a bit of volatility to the top or the bottom by just looking for a break on the 5-minute chart and then trying to jump in on the move. But you have to be careful with the non-farm payroll, because often the first move is actually a false break, and we'll have a retrace of that level. Retrace of that move, and we'll actually move in the opposite direction. Let's take a look at the Great Britain pound. As you can see, this pair moved up again to try to test the top of the resistance level at 161.80, 162. Found a bit of trouble there, and that since has retraced down to 161. It's interesting where this pair is sitting, because it's very similar to the euro. It's sitting just about mid-range again, so basically our parameters have been created already for the move. With the data, and if the data pop, we'll probably more likely move up to the top of the range, 161.80, 162. If the data traders find the data disappointing, we'll probably move back down to the bottom at 160 with the was fixed is the 0.1382 160 fib. So similar, just again, we just have to watch the short-term move and look for momentum in either direction here. We did have a trade set up where you could have gone short here, right about, I think it was right about 161.21. 161.21, just because it was basically breaking below this resistance here, and we had momentum lower. But I chose not to take the trade ahead of the non-farm payroll report. The next pair we're going to look at is the Aussie USD. As you can see, this pair couldn't create much momentum to the top side. It's definitely still in the ascending triangle. Ascending triangle. I'm not going to trade this trend line. I'm just going to show you. It looks like actually it broke through the triangle, broke through the triangle once again. Let's do it on a larger scale. I bet we'll get a different reading there. Cancel it, and if it does break below, this will be the level I've been watching. If it breaks below there, that bottom of the triangle, then Ba-da-da. All right, guys, there we go. All right, so if it breaks below that triangle, the bottom of that triangle, then we could see considerable momentum to the downside. I'm not going to play this line of support. I've been burned twice this week on this on these false breaks on these triangles. So it's not a reliable indicator. I'm just letting you know that's something to keep your eye on. Anyways, so any news where you get a pop to the top side, because everybody has definitely sold off once again, and it is, you can see, just finding resistance right here again. It is forming. If you look at it in this aspect, it is forming higher highs and lower lows. So the trend is to the upside. The resistance zone here is between 103.80 and 104.10. If you get a break of that level, you could see. If you get a break of that level, you could see a break to the top side, and we see a move up towards the 105.20 level in the short term. But if you don't, and we break below the resistance level, we could definitely see a move back down towards the 102.50 level. And of course, you have to watch this trend line here. Basically, all traders are going to be looking for a break above the 104.10 level to get momentum to the top side. That's been the trade of the week, and people seem to want it to happen. So I would definitely be watching that. The New Zealand USD, similar to the Aussie, did break above its resistance zone at 82.65, but it couldn't contain the momentum, and now it's right back in the zone between 82 and 82.50. 82.65 and 82.50. It's basically the same trend as the Aussie. If we get a confirmed break above this level, we could definitely see a move up to 83.50 over the next day. But definitely watch the next day or so. Definitely watch this trend line, because the break of that trend line could open up the pair up to a move down to 81.50. I mean, if we put these two trades right next to each other, it's basically the same thing. It's basically the same thing. It's the same trade. One's trend's just a little more defined than the other, and we're just looking for. So keep that in mind. That is amazing, actually. Keep that in mind. Keep that in mind if you're going to trade these pairs, that you would probably just trade one of them, because you're basically trading the same momentum or the same price action at this current juncture. The CAD is sitting mid-range in its current range. We've spoke about it before. 50 fib is the top, 0.382 fib is the bottom. We'll look for a break of the 50 fib at 10040, which open up the way to the 10348. More importantly, though, if we get a break of the bottom at 9940, we could definitely see it move down to the 98.85, followed by the 97.64 area. The next pair we're going to watch is the USD JPY, just because the yen will have the most it will have the purest reaction to any move caused by the data. And if we get a pop to the top side, we'll probably see resistance around 181.03. Any move to the downside would find resistance right about the 79.65, or maybe that low right there at 79.26. Most of the yen pairs are still sitting in congestion. I talked to you yesterday about the Great BJY moving up towards resistance, and never actually made it there at 129.60. The Euro JPY is still sitting mid-range. It's the same trade, true. 101.90 is the bottom, top is a 104.80. The Oz is it moved up to the top of the resistance level at 80.50 and has retraced a bit. You can watch this heading into the data if we get a break above. And the rest are just sitting in the middle of the ranges. And that's all for Currency Watch. I have a wake up call today. A little bit distracted here. That's all we have for the wake up call today. Good trading, non-farm payroll. Remember, we have expectations for 125. We're watching the euro sitting at the bottom of any move down. Could probably push down to the 128.25. Push up towards this resistance zone. The Great Britain sitting mid-range. We're watching the resistance zone on the top. We're watching the 0.382 fib at the bottom. New Zealand, it's all about the hold or break of this resistance zone right here. Same with the Aussie. Same exact trend. Same resistance zone. And the CAD is sitting mid-range. All right, everybody, come on, let's make some pips, and look out for moves on the Twitter feed.